Hi everyone, Josh Gilbert here and welcome to Stock Break, where I give an in-depth analysis on public companies in under 5 minutes, breaking down their fundamentals and potential valuation. So let's dive in. Hello everyone and welcome back to another episode of Stock Break with me, Josh Gilbert. Today we're going to be looking at James Hardie, an Australian stock that could be set to benefit from lower interest rates and a new presidency in the US. So let's dive in. But before we get started, a quick reminder that this presentation is for educational purposes only, should not be taken as investment advice or a recommendation to buy or sell any financial instruments. So James Hardie, it is a global leader in fiber cement, essentially products that are used in the building industry. The business supplies materials primarily for residential construction, specializing in durable, low-maintenance fiber cement siding and boards. The company's primary customers are home builders, actually rather than commercial property, which sometimes can be surprising. It is dual listed. It's listed on the ASX and the New York Stock Exchange as well. Again, it has sort of been in a pretty narrow trading range over the last 52 weeks, but has broken out in recent weeks, given Trump's presidency. It has established itself as a major player in America. It generates over 70% of its revenue from the US, but it does have a solid base in Asia and Europe. With interest rate cuts starting in the US and set to continue, building activity is set to pick up, with home loans and project financing more affordable. Alongside that, a Trump presidency is also set to benefit the construction sector with his promise to drive the US economy. An increase in home building in the years ahead is a win for James Hardie, with an increased demand for building materials. Another chart we can have a look at is US housing starts. They have fallen since rates began to rise, but we may have seen this number bottom out in July, and we think it will begin to move higher into 2025. Given the lower housing starts that we're looking at on screen, again, a reminder, if you're listening on podcast, head over to YouTube for the presentation. James Hardie's sales growth has slowed in recent years. Their Q2 earnings in November showed net sales fell by 3.6% year over year. This comes as higher rates have obviously pressured new home builds in the US, and home builders have struggled to get projects off the ground. However, as we say, this trend looks set to reverse in the years ahead, and the market expects profits and sales to grow by double digits for the fiscal year ending March 2026. Profit also declined in the quarter due to increased costs and inflationary pressures on materials, labor, and logistics, but the company's profit guidance impressed. Essentially, they also announced a $300 million buyback as well, signaling the business confidence in what's ahead. But I also think that sort of guidance for the full year, it showed resilience, and it sort of showed the growth prospects are intact with an improving macro backdrop. As we say, rose about 6.6% after the result. There is a clear correlation, though, between James Hardie's profit and interest rates. If US interest rates don't fall up as the market expects, this could hold back growth for the business. Another crucial point to note here is that in the US, James Hardie's biggest market, it is significantly short on the housing supply side. With supply not keeping pace with demand, the large millennial generational shift is starting to see that we're trying to see them buying homes. And there is a clear imbalance that we believe will drive new housing growth in the US in the years ahead. Lower rates and a favorable president-elect create a promising environment for consumers spending on homes and business expansion, putting James Hardie in a strong position to benefit from increased demand with housing and renovation. Globally, there is also a clear housing shortage. What we're looking at on screen is UN Habitat. They said the world will need 96,000 homes daily to house the 1.6 billion worldwide who lack adequate housing. That's a very, very important number. It shows the growth that is possible for James Hardie. The business currently trades at 24 times forward earnings. This is higher than its 5-year average. So we're just looking at that on the screen. That sort of medium line there is about 22 times. That's because growth has been slowing, but that could be set to change. The Guru Focus Tracker sees the stock as modestly overvalued at current levels. As I say, it's had a bit of a decent run, but it also ranks its profitability at 10 out of 10. If we look at Bloomberg's analyst rating, James Hardie, it has 9 buys, 6 holds, and 1 sell, with an average price target of $56.10. So we're sort of already trading around about that. So analysts don't see a lot of upside from here, but those analyst ratings could change if we get a strong earnings report down the track, which is absolutely possible. Look, it's challenging to predict policy, particularly in the US, so it's important to focus in on those fundamentals. In this scenario, those fundamentals do look set to improve, and analysts are clearly positive about the business's future. The view of President Trump driving growth in the US, housing shortages, and lower rates could be the catalysts that are needed for growth. Thanks for watching Stock Break. Let me know in the comments what you think of James Hardie. To stay ahead on all things investing, make sure to follow us on all podcast platforms. Just search for Digest and Invest.